Today we'll discuss how we can participate in the rise and fall of interest rate. But before that, we need to understand the difference between interest rate and yield. Interest rate are a benchmark for borrowers, whereas yield is for investors or lenders. Let me just elaborate further between the two. Interest rates are the fees charged as a percentage from a lender for a loan. Yield is a percentage of earnings a person receives for lending money. And between the two, both move in tandem together. Meaning if yield moves higher, interest rate will follow. And today we're going to look into the study about 10 years yield. And first of all, we're going to move into the daily chart that will give you the idea about the yield movement over the next few days or perhaps the next few weeks. And later on, we're going to come back to this monthly chart and that will give you some idea about the long-term yield direction. And I hope that that will also give you some idea about the direction of the interest rate. And there are two points of discussion here for today. And first, we're going to discuss about the direction of the yield in the short term. And then we're going to come back here again to discuss about the direction of the yield in the long term. And disclaimer, please take some time to read at the disclaimer box below. And let's quickly go to the first point about our studies, the direction of the yield in the short term. And for that, we're going to move into the daily chart. Let's try to understand a little bit about since when the yield started to pick up. And we could see that the yield having some bull market since, let me see, since the March 2020, it met a trough, and over the last 2 years and more, it has been on the bull run. Now, let's study a little bit more intimately on this bull market, where I'm suspecting that the bull are about to correct. Yeah. Why? And for the yield over the long run, I'm still seeing that it's still a bull market. Once it hits certain trough, I think you will find support and start to resume its uptrend. But I think this move, it is good enough for me to trade the yield. And now there is a divergence that is going on, which is what I call the bullish divergence. Bullish divergence, it means that it is in the bull market still. But for the time being, I'm saying that there is a divergence. It means that this bull is losing its momentum, and we look out for trigger points to perhaps do a sell short. Now, for the trigger points, what I'm going to use here is that the discussion that we made over the last few videos, over the last few weeks, that we mentioned about how to construct a trend line. So the rule was at least 3 significant trough, which is 1, 2, and third one. So these are false break, as you could see. Maybe I should expand a little bit more so that we can appreciate this bull run with this trigger point. Now we could see that on the 29th of June, it broke this uptrend line and followed through by this nice run on the downside. And this is what I call we saw a bullish divergence. It means that this bull is losing some momentum. And then this is my trigger, and definitely a sell short for me for the time being. Expectation is that the next few days or few weeks to come, likely the yield is going to travel downwards. But over the long run, we're going to examine the monthly chart in a short while that I'm seeing that the yield will continue its bull run. But this move is for the traders. Okay. Now let's go back to the monthly chart. And that will bring me back to point number 2. Let me just squeeze in a little bit. And I'm going to bring back all the content of discussion tonight. And point number 2, we're going to discuss about the direction of the yield in the long term. And I'm going to use the same method about trend line. And we could see that this is 1981. Over the last 40 years, that the yield has been on the bear market. The interest rate has been coming down. And because of the fundamental reason, and now we're going to discuss about a technical reason as well. Fundamental reason, we know that the inflation pressure seems that is unstoppable, and I think it's not going to ease anytime soon. So likely interest rate is going to continue to rise. And how about yield now? And now earlier I mentioned about having at least 3 significant peaks, right? So let's try that out. Maybe I would like to start from here to join all the way. Okay. Then along the way, it's all right to make some adjustment. Yeah. I'd like to make some adjustment here. Okay. Or maybe I should extend a little bit more. Yeah, it seems to me that this downtrend line is pretty good, and we could see a few picks falling nicely, and of course along the timeline almost touch, and there are some false break here. And what we could see here is that over the last few months, it was quite a clear break to me. And what my expectation for the monthly chart for this 10 years yield is that perhaps earlier we studied about the daily chart, there's some retracement going on, but over the long term, and I still believe that the yield will continue to move up. And that's my expectation. Maybe the next few days we will move down, and do look out for a trough and before it start moving up again. Yeah. So that's what I'm seeing here. It seems to me there's a changing of trend from a downtrend over the last 40 years. Maybe that will take us to the future. For the next few years, I believe that the yield will continue to rise. And how can we participate in the yield or interest rate is that there are this product called the micro 10 years yield futures. And I just want to be very clear about this. So I researched on the website of CME. It states that the micro treasury futures are not a micro-sized US treasury securities. They convey no rights of ownership or they pay accrued interest. So this is something that I understand that it's just a futures product, is an instrument for traders and perhaps investor to hedge into the rise and fall of interest rate. Now, to understand about the yield, it seems complex, but it's not really. Okay, so we have to understand the contract specs about 1 basis point. And the contract spec is that the 1/10 of 1 basis point is $1. I know that that's a bit complex to understand, but I further fine tune it, or every 0.001% movement is equal to $1. It means that for short-term trader, now if we are looking at from 3% to about 3.05%, since 0.001% is $1, means that the potential profit could be $50. Now, if you're a bit more on the long term, there's one full basis point that you could see from 3% to 4% when you participate in, what is it, 2 years yield or 5 years yield. In this case, it's 10 years yield. From 3 to 4%, that's 100 basis point, is equal to $1,000. So feel free to leave any comments below. I love to exchange ideas with you. Continue to explore this topic with these related videos and register for these webinars as well. Follow my Facebook page for my daily market insights. To be updated with my latest video, subscribe to my channel and remember to turn on the notification bell. See you again very, very, very soon.